All right, let's paint a picture. Imagine for a second. It's January 2026. The financial markets are on fire, totally euphoric. Everything, and I mean everything, is hitting all-time highs. But in this roaring orchestra of soaring assets, one instrument is completely, utterly silent: oil. Now, that silence, it isn't a sign of stability. It's the most dangerous signal of all, and it's pointing to a crisis that's been 40 years in the making.
Okay, so let's really dive into this, because what we're looking at here is a massive and, frankly, a completely counterintuitive puzzle. On the surface, the global economy looks like it's in the middle of this unprecedented boom.
Now, what's so fascinating about this slide isn't just the numbers, it's what they represent. You've got gold at $5,500, the S&P at a record high. This is a system that's just swimming in cash. But then you look over at oil, the actual lifeblood of the global economy, and it's just sitting there at a measly $55 a barrel. In a world where everything is getting more expensive, this one critical asset is stubbornly cheap.
And that right there is the central mystery we're going to unravel today. It just defies simple logic. Why is the one commodity that makes literally everything else run the only thing not joining the party? Look, this isn't just some weird market anomaly. It's a symptom of a much deeper, hidden risk that the market has collectively decided to just ignore.
So to really get what's going on with this paradox, we have to pull back the curtain on a game that the global financial system has been playing for decades. It's a strategy that's designed to create this brilliant illusion of prosperity, mainly by making its true costs completely invisible.
So here's the crucial point. The system isn't broken. It was built this way on purpose. This center-periphery game lets the center, Wall Street, London, Tokyo, enjoy all the benefits of cheap money and booming markets. And how do they do it? Well, they do it by systematically pushing all the messy consequences, the real costs and the real risks, out to an invisible periphery.
And this is the playbook, broken down into 3 simple steps. Step 1, you keep all the good stuff, the profits, the wealth, right there at the center. Step 2, you take all the costs, the bad debt, the social fallout, and you shove it out to the edges. But that last step, step 3, that's the real genius of it all. You make that periphery invisible. You just pretend those hidden places and all their problems simply don't exist.
But here's the thing, and this is like a fundamental rule of both economics and physics. Costs are never eliminated. They're just transferred. So let's take a look at where decades of this hidden debt have been piling up, creating 3 seemingly unrelated ticking time bombs.
First up, the financial cost. So after the 2008 crisis, all those risky loans, they didn't just vanish into thin air. Nope, they were just shuffled out of the regulated banks and into the shadows of the private credit market. You should think of it as a $3 trillion black box. It's opaque, it's mostly unregulated. The risk wasn't resolved, it was just moved into a darker room waiting for someone to flip the switch. Second, we have the geopolitical cost. And here's another one of those head-scratchers. Decades of sanctions on Iran were supposed to weaken the regime, right? Well, they had the exact opposite effect. By crushing the official economy, they accidentally supercharged the Islamic Revolutionary Guard Corps, the IRGC, this powerful force that basically operates like its own country. The sanctions didn't get rid of the threat, they just concentrated all the power in the hands of the most radical and uncontrollable players. And finally, the social cost. This one hits a little closer to home, right inside the center itself. It was all driven by this thing called financialization, which is just a fancy way of saying our economy became more about making money from money than from actually making things. This made asset holders rich, but it hollowed out the industrial heartland, creating decades of deep resentment that the establishment just ignored. Well, it grew and grew into a powerful and frankly unpredictable political force. Okay, so we've just laid out 3 deep-seated risks, all festering just beneath the surface. If you're finding this analysis valuable for understanding these hidden connections, do me a favor. Please like, share, and subscribe to our channel. That way you won't miss what happens next. So now you've got these 3 supercharged risks: a financial black box, a radicalized geopolitical actor, and a potent domestic backlash. They've been building for years, each one seemingly in its own little silo. The only thing missing was a spark to connect them all. And that spark arrives in early 2026. That social force from the periphery that was ignored for so long, it elects an unpredictable leader, and his actions directly trigger that geopolitical time bomb. Airstrikes on Iran take out the supreme leader, the one person who could possibly hold the IRGC back. Now, with no one to answer to, the IRGC is free to act on its own radical logic.
And their target? It's the jugular vein of the global economy, the Strait of Hormuz. We're talking about a tiny, 33-kilometer-wide choke point. But get this, 20%, a full 1/5 of the world's entire oil supply has to pass through that tiny strip of water.
And just like that, the silent asset begins to scream. For all that speculative money that was just bouncing around the markets looking for a home, this is the moment. It's not a fear or some analyst's forecast anymore. It's a hard, physical reality. The oil has stopped flowing. This is the moment the Periphery returns with a vengeance. The system which for so long benefited from that cheap, silent oil now turns on itself. The frantic speculation in oil becomes the very mechanism of the global economy's destruction.
Because here's the critical difference, and you have to get this. Speculating on gold is a game for investors, but speculating on oil, that's a negative-sum game for everybody. A gold spike doesn't make your loaf of bread more expensive. An oil spike is a direct tax on every single person and every single business on the entire planet.
This massive economic shock slams directly into that hidden financial periphery we talked about. The sudden surge in energy costs just evaporates corporate profits, triggering this catastrophic wave of defaults inside that $3 trillion private credit black box. And at the exact same time, it shatters the very foundations of the market's last great hope, the AI investment bubble. The three pillars that were holding it all up, low interest rates, an appetite for risk, and most importantly, stable energy, they all get kicked out from under it almost overnight.
And here, right here, we see the final, brutal irony of the center periphery game. The very same excess capital that fueled that big AI bubble now flees in a panic toward oil. But the oil shock that it creates destroys the very foundation of cheap energy and low inflation that the entire modern economy, AI included, needed to survive. The system literally begins to devour itself.
So the ultimate takeaway here is that costs you push to the edge never really disappear. They just sit there in the dark, gathering energy. And when they finally return, the reckoning is always proportional to the length and the depth of the deception. And that leaves us with a really provocative question. What other costs are we pushing to the periphery today, and what price will be demanded when they inevitably come back?